Welcome back, traders. So, when you take losses, how can you make it up? Well, there is no 100% way of doing it, but I do have a trade example for you guys today that possibly could help you figure out a way to make up losses in your own trading. Now, it's important to know that it is not guaranteed. So, it's very important to be very careful when you're trying to make up your losses because you could be adding to it. It's important to know when you're going to be stopping for the day. And I'll tell you why I was able to luckily make up my loss today. And let's go ahead and jump right into the chart. So I have the Nasdaq pulled up on the daily. Just to give you an idea of my bias this morning, I was bearish because I'm looking at this old fair value gap. All these bodies are staying within it. And if you look even closer, we do have a volume imbalance as well, pretty much in the middle of that fair value gap. So there's a lot of confluences here. All the bodies are respecting it. And now this is the candle for the day, so it did come down, but I was bearish. I was looking at this fair value gap. Now it is off a little bit. Now you'll know if you watch my market outlook video that I had the settlement enabled and I was including this large volume imbalance, but let's go ahead and take it off. And if you just go ahead and use it like a regular one to include the volume imbalance here, you can see that we pretty much went to 50% of that fair value gap. That is picture perfect and super pretty. Anyways, so I was looking for price to come down into this fair value gap just to rebalance this some. So I was bearish on the day. Now, I want to jump into the 4-hour. And the only thing I really want to note, actually two things. If you look at the highs right here, we do have S&P divergences on the highs. If you look at S&P, it was able to make a higher high on Wednesday, but the Wednesday high right here did not take out the previous high. So we do have S&P divergence on the highs that further fueled my conviction that we're going to go to the downside today. Now, looking back over here, we have a 4-hour fair value gap in the upper half of that daily fair value gap. So this is also going to play an important role. I thought if we do dig into the price, of course, we want to aim for the highs, but if we go down deeper, we could go into this 4-hour fair value gap as well. Now I'm going to go ahead and jump straight into the 5-minute, and I'm going to go back a little bit because all this price action is going to make it hard to see, and I want to stretch things out. So give me a minute here. Okay, so this was pre-market, and I was looking at these highs right here. I thought, okay, I want to see these highs get swept. And then we had 830, which was right here, didn't do a whole lot. So as price came up here, we did sweep it, and then we started heading for the downside. But looking left, you see these lows right here? I was looking at this fair value gap. Now, it can be a little confusing with the blue daily fair value gap, so I'm going to go ahead and change this to a teal color. Let's go with this one. So hopefully that would help you distinguish it. But I thought it could come back down here. So this was going to be like my first target to the downside. And now I'm going to go ahead and jump into the 1-minute, and I'm going to go ahead and put on execution so you can kind of tell you like what I was thinking as I was executing on my trades. So going back here, let's turn on executions. Okay. So here, pre-market, we did take out that high, and I saw a fair value gap here. So let me go ahead and zoom in just a little bit closer. Okay, so you see this fair value gap? So that's where I went ahead and entered. I thought, okay, I'm going to take a chance on it. It's not that much risk. I got in at 216, and I had my stop above this, well, the new week or the new day opening gap, which was 222 or so. Anyways, we did chop around. I was not happy to see this. I wanted to see more of a displacement down, and then I could aggressively move my stop because I know that this probably wasn't the best fair value gap to enter. It wasn't like a dramatic displacement. There was no confirmation. So I knew that this wasn't that high probability, but the risk was really small. I went in with a small amount. So that's why I went ahead and took this one. Of course, you see I get stopped out. At this point, it's like getting close to 9:30's opening bell. So I was like, okay, I'm going to just wait, see how the opening bell is going to play out. we did get a drop down back into the middle of the range. Now, I didn't want to take any of these civvies because we went back into this inefficiency, and I thought that this could push price up and take out this high once again. So I just waited. And as we capped the 9:30 opening bell, we did wick down to take the sell side first, and then we went back up on the next candle to take that buy side. So that's exactly what I was expecting. I thought this high could get swept one more time. Now we had large displacement down. So my idea now was I'm going to try and take a short. I saw this fair value gap. It was the first presented fair value gap. And we do have a balanced price range here where the price went down and up. So I thought, okay, this could be a reasonable place to put my stop loss. I'm going to give it a try around 203 or so, 203. And I got in at 189. So that was still pretty small, 14 points or so. So I thought, okay, I'm going to have to try and take a smaller amount because I didn't want to put my risk all the way up here. That was way too much. But it did end up going through here and stopping me out. Now, the funny thing was I was also looking at a optimal trade entry from this high to the low, and lo and behold, it went perfectly to the optimal trade entry. So, anyways, that could have been a short for you if that is your trading model, but it wasn't for me. I didn't take it, unfortunately. But after I get stopped out, I saw this big displacement here. And this is where I thought, like, okay, this is going to be it. It did go through the 5 minute fair value gap. That was going to be my first target. But let's go back to the 15-minute real quick. Okay, so I had to set up the 15-minute, but I was looking at these lows as well. This was also going to be a partial below that 5 minute fair value gap. I thought, okay, we could take that low. We could take this low. I'm not going to mark it out as in that old first percent fair value gap, but if we take this low, we could take this one as well. So these are going to be like my, the partials on the way down, ultimately to that daily fair value gap. That's what I was looking at. Okay, so jumping back into the 1 minute, I was looking for this fair value gap to get traded back into, and I was going to go ahead and have my risk at the top of that fair value gap. This was just a big fair value gap that if it's going to go any lower for that daily target, I don't want to see this close in. So I was willing to take anywhere inside of here and have the risk at the top at 196. This is 173. So that is going to be 22 points of risk or so, which was pretty reasonable. So anyways, we did get some consolidation here. And then this wick candle right here, when it was going up, I thought it was going to come up. I was getting ready to get in a short. If it comes back into the fair value gap, it did not. And it started pushing down. So I thought, okay, maybe it's not going to get back there. It's probably going to be pretty strong today. So I'm just looking, and we have a small fair value gap. I was prepared to take this one as well. So I was prepared to take this fair value gap, but it did not get retraced to even this fair value gap here. I was also prepared to take because we did not reach that next target. Unfortunately, it didn't retrace there as well. The risk would have been, let's see, from 122 to 142. So that was acceptable, 20 points for me. But no dice, didn't get it. It kept going lower very strongly. And then this candle right here, you can see it did tap into that daily fair value gap. So at this point, at this point, I'm done with shorts. I am no longer interested in shorts because the higher time frame target has been hit. Now, some of you may think, okay, you could want to go short here as well, but for me, that is not a good price. And it could come back up to this fair value gap. It could even come back to this fair value gap or this previous. So it's just like that is not going to be a good ratio for me. And we don't have too much downside. So at this point, I'm just watching. Now you'll see I take another trade. I'm just going to hide that for a sec. We did come back out. Remember, this was that 4-hour fair value gap. So we did come back, and I saw that it traded in it. Actually hit it like pretty much perfectly. So once we got that, then we started going up. I noticed this fair value gap. And my idea in my head was we probably are going to have some retracement since we did not have much retracement on the way down. And we could come back up to, well, this fair value gap here. This was the last high that we created, this fair value, and this was the last up candle as well. So my idea was we could retrace back up into here, possibly go higher, but I didn't want to really bet because we could go even lower. Um, who knows, right? My higher time frame targets hit, but we could still go lower. Anyways, as price came down here, I was looking at the fair value gap and I went ahead and entered. Uh, I'll tell you exactly what I was looking at. I was looking at this SIBI here. I wanted this to be an inversion fair value gap, and I saw price tapped it right dead in the center. My risk was going to be down here below this fair value gap candle, and we have a balanced price range here as well. So my risk was down here at 981, right in the middle at 995. I thought, okay, that is actually not that much risk, so I can take that. I didn't want to take it up here at 0.12. That would have been too much risk, almost 30 points. So did not want to just take it up here. So I was watching to observe what is going to happen inside this fair value gap and the inversion fair value gap. So I saw it tap one time, tapped one more time, creating equal lows. I did not like that because I thought it could sweep below it, but I was prepared to take it if it swept below the equal lows. It did, and I saw it come back up away from this old SIBI. So I went ahead and just marketed it in. I had my risk down here, so that was going to be 24 points, nothing big. And then as it was going up, I was thinking to take it off above this high, but as price went up above this fair value gap, I'm thinking I'm on side. However, I was pretty much break even at this point. So I was already satisfied. It hit my higher time frame target. Not sure if it will retrace. I mean, it didn't show much retracement on the way down. So with all of that, I decided to just get out, pretty much break even, a little bit in the positive, but nothing much. It did come back up more, but completely satisfied with this. And I went ahead and just closed the chart. I was done. And that's something you have to do yourself. You have to know when enough is enough. Today, unfortunately, I got a little beat up, but I was able to recover and survive to trade another day. But for right now, my idea is that since it hit the lower target, we're probably just going to consolidate for the rest of the day. And I'm not really wanting to watch it any longer. So, anyways, I hope this video has helped you guys out. If you like it, please hit the like button. Subscribe for more of these videos. I do have the backtesting videos coming up. So until I see you guys next time, safe trading.